Let's start with a bold truth. You don't need a bank to buy property. You don't need perfect credit, a massive down payment, or even a conventional loan. What you need is creativity, strategy, and a willingness to think outside the box. Creative finance is the art of structuring deals in unconventional ways. It's how savvy investors acquire properties with little to no money down, bypassing the gatekeepers of traditional lending. Whether you're a beginner or a seasoned investor, mastering creative finance can be your ticket to building wealth, solving problems for sellers, and creating win-win scenarios. In this video, we'll walk through everything you need to know, from mindset to mechanics, negotiation to paperwork, and real-world examples that bring it all to life. What is creative finance? Creative finance refers to any non-traditional method of buying or controlling real estate. Instead of relying on banks or mortgage companies, you use alternative strategies to structure deals. These include seller financing, the seller acts as the bank. Subject to, you take over the seller's existing mortgage. Lease options, you lease with the option to buy later. Wrap mortgages, you create a new mortgage that wraps around the existing one. Private money, you borrow from individuals, not institutions. Assumable loans, you formally assume the seller's mortgage. Each method has its own nuances, risks, and benefits. The key is understanding which strategy fits the situation and how to present it in a way that makes sense to the seller. The mindset of a creative dealmaker. Before you dive into tactics, you need the right mindset. Creative finance isn't just about clever paperwork, it's about solving problems. Here's what separates successful dealmakers from the rest. Empathy. Understand the seller's situation. What do they need? What's causing stress? Curiosity? Ask questions. Dig deep. Look for clues. Confidence, you're offering solutions, not begging for favors. Flexibility, be willing to pivot. Every deal is different. Creative finance is like jazz. There's structure, but also improvisation. You're not just buying property, you're crafting a story that works for everyone involved. Identifying the right sellers. Not every seller is a candidate for creative finance. You're looking for people who are motivated, flexible, and open to alternatives. Ideal seller profiles. Distressed sellers, facing foreclosure, divorce, job loss. Tired landlords, burned out from managing tenants. Inherited property owners, don't want the hassle. Expired listings, couldn't sell conventionally. Free and clear owners, no mortgage, open to monthly payments. Where to find them? Driving for dollars, Craigslist and Facebook, marketplace, probate and tax delinquent lists, wholesaler networks, real estate meetups. The goal is to find people with a problem and offer a creative solution. Starting the conversation, approaching sellers can feel intimidating. But remember, you're not selling, you're solving. Sample opening script. Keep it simple. You're planting a seed. If they're curious, the door opens. Key questions to ask. Why are you selling? What's most important to you? Price, speed, or monthly income? Would you consider payments over time instead of a lump sum? These questions uncover motivation. They help you tailor your offer to the seller's needs. Seller financing explained. Seller financing is when the seller becomes the lender. You agree on a price, down payment, interest rate, and monthly payment. Why sellers like it? Steady income, tax advantages, faster closing, no realtor commissions. Example. Deal, purchase price, $200,000, down payment, $10,000, interest rate, 5%, monthly payment, $1,200. Term, 20 years, you get the property. The seller gets passive income. Everyone wins. Subject to deals. In a subject to deal, you take over the seller's mortgage payments. The loan stays in their name, but you control the property. Why it works. Seller avoids foreclosure. You acquire property with little cash. You inherit favorable loan terms. Important. Always use a title company and get legal advice. You're dealing with someone else's credit. Subject to deals are powerful, but require trust and transparency. Lease options and wrap mortgages. Lease option, you lease the property with the option to buy later. Great for buyers who need time to qualify for a loan. Wrap mortgage. You create a new mortgage that wraps around the existing one. You pay the seller and they pay their lender. These strategies work best when the seller is flexible and trusts you. Structuring the deal. Every creative deal needs structure. Here's what to include: buyer and seller info, purchase price, payment terms, interest rate, if any, term length, exit strategy, contingencies, use a standard purchase agreement and add custom terms. Always consult a real estate attorney. Underwriting the deal, run the numbers. Make sure the deal makes sense. Key metrics: cash flow, repairs, taxes and insurance, vacancy rate, ROI. Use tools like Deal Check, PropStream, or simple spreadsheets. If the deal doesn't cash flow, restructure it. Negotiation tactics. Negotiation is an art. Here are some tactics. Silence, let them fill the gap. Anchoring, start with a bold offer. Framing, would you rather get $200K now or $250K over time? Scarcity, I'm looking at 2 other properties this week. Always be respectful. You're building a relationship, not burning bridges. Legal and paperwork. You'll need purchase agreement, promissory note, deed of trust or mortgage, lease agreement, if applicable. Addendums, use a title company or closing attorney. Don't DIY this part unless you're experienced. Real-life deal breakdown. Let's walk through a real deal. Seller, retired landlord, tired of tenants, property, duplex, needs minor repairs. Asking, price, $180,000. Offer, $10,000 down, $1, 200 month for 15 years. Cash flow, $600 month after expenses. Seller loved the idea of passive income. You got a cash flowing asset with no bank involved. Scaling with creative finance. Once you master the basics, you can partner with other investors, raise private capital, package deals for wholesaling, build a portfolio without traditional loans. Creative finance isn't just a tactic, it's a philosophy. Common mistakes to avoid: over-leveraging, ignoring due diligence, poor communication, not using professionals, failing to exit properly. Learn from others' mistakes so you don't repeat them. Your action plan. Here's your roadmap. 1. Learn the strategies. 2. Build a lead pipeline. 3. Practice your scripts. 4. Analyze deals daily. 5. Network with other investors. 6. Close your first deal. You don't need $1 million. You need creativity, courage, and consistency. In conclusion, you're the architect of opportunity. Creative finance is how you turn no into maybe and maybe into yes. It's how you buy properties others overlook. It's how you build wealth while helping others solve problems. So go out there. Talk to sellers. Make offers. Learn from every no until you get your first yes.